Hello, YouTube and their crypto enthusiasts, and welcome to another episode of Equibit Crypto. Today, we are going to talk about why Bitcoin is not a hedge against inflation. But first, we are going to have a little look at what happened the last few days. As you see, Bitcoin is in a little bit of a correction. Um, this is one thing here that is a bit surprising, as that the Bitcoin dominance actually gone down while Bitcoin is in a correction. So I think this is telling us that um, people might have, after this Meta thing from Facebook, whales might have sold off a little bit of Bitcoin and bought into things like wax and other uh, gaming coins. Because if we see at the Bitcoin price, that have adjusted about 16.83%. But if we look at the market without Bitcoin and Ethereum, that is down 15%. So it's down a little bit less um, than Bitcoin, not by a long shot, but enough for us to start question if that might be the case. If we look at the Bitcoin dominance, I think this was the top 10th of November. We got about a correction of we're at this point now. So no, here we are now. So we have seen a decrease about 5% in the Bitcoin dominance, which is surprising because normally when the Bitcoin price go down, then the Bitcoin dominance is actually going up as altcoins fall more than Bitcoin. But this time it's the opposite. But there have not really been any bearish news for Bitcoin. So the way I see it is it's just whales maybe redistributing themselves a little bit into altcoins. So I'm not worried about the Bitcoin price. I think we're going to hold the price here at this key support level, and pump upwards from here. But yeah, we might go down a little bit more. But I think now after Thanksgiving, we're going to see something similar like last year, where we pumped to the upside. We have seen some sick gains in our altcoins, Solana and WaxP. Also in BNB, I think that is our altcoins, and also this PMON. Here we took a little bit of a dive. We came down to our second buy line here, and today we're pumping 11%. So there's been some new staking mechanism added to PMON. So you might want to check that out. But now let's get into the point of the video, which is inflation and why Bitcoin is not a hedge against inflation. So let's first look at the evidence. The orange line here is growth stocks, represented by a Vanguard ETF that invests in different growth stocks. And as you can see, there is a clear correlation between Bitcoin price, the blue line, and the growth ETF. So we know that growth ETFs or growth stocks in general do not do well during inflation because they do not have much revenue coming in. So they will decline during periods of inflation because during inflation there is a high chance of interest rates to go up. So whenever we have inflation numbers coming out that are higher than expected, Bitcoin takes a little bit of a dip together with the growth stocks because there is a fear in the market that the interest rates might be increased or that quantitative easing is going to stop unless the central bank have or the Fed, in the case of the United States, have told everyone that they're not thinking about raising interest rates. So let's think about it for a moment, because companies like MicroStrategy, what are they doing? They are getting free money as a loan, and then they are investing that Bitcoin into, or that money into Bitcoin. You can only do that at a zero interest rate. Otherwise, you will have to have some sort of income stream. I know they do, but you need some sort of income stream in order to pay for those loans. Bitcoin might be a hedge against inflation in the long run, but in the short run during a bull market, it's not really a hedge against inflation because of the things we already mentioned. What Bitcoin and tech stocks are a hedge against now in the middle of this bull run is stagflation. Stagflation is where you have high inflation and you have declining or stagnating GDP. So the economy is not growing, but still we have inflation. And that will happen when you print a lot of money or you do quantitative easing. During this scenario of stagnation or stagflation, it becomes very hard for established companies to make money because they have increased production costs and it takes time for them to pass that cost over to the consumer. Because as a consumer, you don't want to buy a TV for $1,000 that cost $500 last week. So what the established companies need to do if they have increased production costs is to slowly over time increase their prices to the consumer. But this really eat their bottom line for a long time, and that follows that the stocks will not perform very well. So we see this already that quite a few of these established companies like AT&T and T and a few others, they are not doing as well as the tech stocks because people are afraid of stagflation. So here we have the money supply. Before COVID, we had 15 billion dollars, and now after we have about 21 billion. So there's way much more money in the system. And if we look at the GDP, that haven't increased that much. On this graph, it looks kind of all right. It seems like we're climbing very, very steeply. But if we look at the graph where it's adjusted for inflation, we see that okay, we came out of the situation we were in, and then we increased the GDP quite rapidly. But now it seems to be slowing down. Do we get a rollover here? That is the big question. If we do get a rollover here, then that will be very bullish for both tech stocks and for Bitcoin, but maybe not so much for established companies that are generating profit right now. Because if the GDP is not growing, it becomes really, really hard to justify increasing the interest rates, and it also becomes very hard to stop quantitative easing. On the other hand, also it's going to be hard for the central bank to increase the interest rates anyway because of all the debt that the United States have after this crisis. So I think we're going to see quantitative easing continue. They are already saying that they will start some tapering, that they will decrease the amount of quantitative easing they are doing and decrease the amount of bonds they are buying from the banks. In the long run, though, I think we will see some sort of deflation because of all the new technology that is going to lower the cost of production of goods. And I think are going to see actually some deflation in the future. Not the next few years. I think at least the next year is going to be inflation, and then we might get a period of deflation following that. Just think of what automatic driving will do for the transporting industry. I mean, they are going to lay off so many employees and cut their cost with billions. So here we have a schematic showing the impact of quantitative easing on the economy. And as we can see, the first thing that happens is that real asset price go up like crazy, like that we've seen in the stock market, that we've seen in Bitcoin, and then we get to a point where things turn and go the other way, and real asset price fall. And the bad thing is also that consumer price level that just keep on going up. So we might come in a situation where things are getting very much expensive for the consumer. Um, the normal person in the street, he will have a rough time coming. And we see that inflation also is going up quite steadily until a point where it turns and then slowly dies off. So where are we now? That is the big question. The way we can figure out where we are, that is to look at the M2 supply. When the M2 supply starts flattening out, that's when it's time to think about moving away from risky assets and try to go into something that have been proven over time to keep its value. I'm thinking of gold, and I think many people think that gold is dead and all that, but I think that gold will at some point along this curve start to do good. Um, I do not think Bitcoin is going to it's going to survive, but it's not going to survive without the severe dip at some point as we progress along this curve. Even though Bitcoin is growing with 130% year over year users, but at some point things gonna get a little bit ugly, and we are going to see some catastrophic drops in the stock market, in housing prices, in everything. Because if you look at the impact of the quantitative easing, these guys, the consumers, they need to pay for their goods, the thing they needs on everyday basis. And as prices go up, they can no longer afford a lot of things, and that will cause a crash probably in the housing market, and it will probably also make crypto go into a severe dip. So I don't think we have seen the last dip in crypto. I am very confident that over the next 20, 10, 20, 30 years, I mean, crypto is going to go up and to the right. But right now, we're trying to figure out when is the time to take some profits, when is the bull run over. I do not believe that the bull run is over now. I think we are going to pump for quite some time, and what we need to pay attention to is the M2 money supply. When this stop increasing, that is when we're going to go back to this schematic and see, okay, this is when real assets prices are going to start falling. If they continue to do quantitative easing and continue to rise the M2 money supply, we are best off sitting in tech stocks and in Bitcoin. When I say tech stocks, what I really mean is growth stocks. Stocks, companies that are still growing, that do not generate a lot of profit right now, but will continue to, or will hopefully do well in the future, and are growing their revenue year over year. And I would really like to know what you think about inflation. So leave a comment below and remember to subscribe and like the video. And with that, I think I bid you a farewell, and I wish you a very happy Thanksgiving. And please flash your wax gains at the dinner table to all your relatives. I don't know how many 100% we did on this, but it was brutal. It was almost a little bit embarrassing how I think we did 10x, and we didn't do too bad on Solana neither. Pimon, there we took a little bit of a hit, but we got in around here 14. Today we are pumping. Yeah, this is early. This for this you need to stomach some volatility, but I am very confident in Pimon, polychain monsters. This is going to see massive explosion to the upside that I am very confident of. Of course, I do not. Nothing is guaranteed in this world, but I put my money where my mouth is, so I have Pimon and lots of it. So that's it for now. Bye bye.